Hi, everyone. This is Jeff Praise with Interactive Brokers. It's my pleasure to welcome back to our podcast studio, Scott Bauer, Prosper Trading. Hey, Scott, how are you?
Hey Jeff, I am great. It's summertime. How are you?
I'm good. I'm good. And it is always a pleasure to have you in here for our 5 minute podcast. And we always just catch up and talk about the past 5 days in the market, kind of what's ahead. A lot of stuff going on, as always. Right?
This is a big one. We talk about some times of the year that can really set the tone for the rest of the year. This week is really major.
Yeah. And looking back at the past week, what key factors have driven like the major market indices performances? And how did different sectors respond to these catalysts?
I think over the past week or several weeks, really the big thing has been movement with tariff negotiations. I think the market has really accepted what is going on and looking at this as the best of a worst possible outcome. And so I think that's why we've seen a lot of complacency here and a lot of stocks get back to all time highs. Tech stocks really recovering, but obviously we have to mention what has happened with some of these meme stocks and maybe some of the animal spirits that have been out there because that really over the last several weeks has come to the forefront once again.
And you mentioned tech and the meme stocks. Are there specific stocks or even sectors that showed the most interesting patterns? They may not necessarily be going up, but are they over the last five trading sessions? And
If
what
you look,
technical
if
indicators?
you look at some of the big financials, the
Mhm.
way they've hung in there or responded, Goldman Sachs, J.P. Morgan, some of the others, boy, they are strong. I'm not sure if the Fed changing rates at some point, if that's going to affect it, but boy, these financials look great.
And what? There's been some economic data released, correct? Especially even today, and or corporate. You mentioned earnings. Do you think they're going to have lasting implications for the market direction in the coming days?
I think we might because this data we're getting shows that the economy is really humming along. We've seen some improvement in some of the eco data. And then, as you said this morning, we got GDP much better than expected. That's good. It's healthy for the economy. But bottom line is, this strong data is not going to make any decision for the Fed on what to do with rates. It's not going to make it any easier for them. In fact, what it may do is make them pause longer.
Yeah, no, that makes a lot of sense to me. And we just talked about the past week and today, but looking forward, because we always kind of like to do the next 5 days as well. Are there any macroeconomic factors you think will have a big influence on the market sentiment?
So obviously we have the big jobs number on Friday, and that number will not have anything to do with what the Fed does for this meeting, but going forward at the September meeting, depending on what that jobs number is, if that is a strong number as well on the heels of the rest of the decent eco data that we've gotten, we probably will see a shift in the Fed Watch tool and the Fed's thinking for a potential cut in September. So we've got that. We also obviously have the August 1st deadline, which I know that President Trump came out and said that is not going to be extended. I don't know that's going to impact the market so much because the market has really taken the tariff situation into what we're looking at in the market going forward. And like I said, it's unbelievably resilient.
Yeah, and are there any particular? You mentioned tariffs. That's always always in a conversation these days. But are there any particular risk factors or opportunities that you're watching closely for the upcoming week?
I absolutely think there's risk. I personally think volatility is too low. Just with all of pro data that's coming out with the tariffs, with interest rates here. So I still think that there is some downside risk to the market. Now that being said, with volatility where it's standing, and I'm not just talking about the VIX, I'm talking about vol in the indices, vol in individual stocks here. Personally, I think it's too low, and it's a great time for me to maybe stay in my long positions or stay in the long and overall, but just buy that cheap protection. We've talked about it before, Jeff, and
Yep,
this is a trader's mindset, right? Buy when you can and not when you have to.
exactly. This has been great as always, Scott. And for our listeners, you can find more from Scott at prospertrading.com. Also on our website, if you go to education, you can find all the past podcasts we've done. And my understanding too is you swung by our Sense of Security podcast the other day as well. Is that correct?
And I'm trying to get all over the place here.
I love it. I love it. All right. Until next time, thank you, Scott. Appreciate you coming by.
Thanks very much, Jeff.
Yep.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances and, as necessary, seek professional advice.